Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Sten with tonight's Deep Dive. It is January 16th, 2018, and I thought I'd take a look at crude oil, the ETF being USO. Had a customer that was looking at crude oil, and I always try to address things here in the deep dives when I have the opportunity, when specifically certain conditions kind of show up here. So I thought I would take a look at crude oil. So where do we stand here? We got short, intermediate, and long-term trends all pointing to the upside. So this is a really nice, strong trend that we're in right now. But there's some warning signs that are occurring today and have occurred in the last couple of trading days. And one of the alerts is whenever you see a technical rating that is not pointed at higher or lower, it's kind of this in-between stage. It means that obviously something is taking place, and it has a tendency to occur as the market has topped and starting to come back down. It's not perfect, but the technical rating in this particular case is flat. Now here's the key here. They had a pivot high occur in our elastic level. We had a rocket that occurred here in our power trend, and we have a support gap that occurred here with today's action. So I'm going to show you what this represents and see what we can actually do with it. When we take a look at the pro alerts, these are the patterns that we often look at. We had a surge high that occurred 2 days ago, and that was a precursor to the fact that our systems had been hedged and that we are waiting for the market to tell us which way the market was going to move, and then our systems would unwind the longs or the shorts, and then we would add to the shorts or the longs, and then be able to bolster our position. So the fact that we had been in a phase where we'd been going through and hedging ourselves, well, that obviously played out here with today's action. So let's first take a look at the market here real quick. Here's a daily bar here for crude oil. You can see that we had a nice little sell-off here today. We've been sort of meandering to the sidelines here, but we've been seeing, at least according to our elastic level indicator, that as the market's been hitting higher and higher highs, that we've been hitting lower and lower lows, lower highs, higher highs. And so that's a nice little bearish divergence that has been occurring here. We also are now in a high level of volatility according to our energy level, and it's kind of spent. It's done quite a bit. And so what we're going to be looking for is a little reversal here, and you'll see that based on our systems, I'll just simply show this to you right now, that we are short the market. We've got 1, 2, 3, 4, 5 systems. We've got a 120 minute, another 120 minute, another 120 minute, 45 and a 60 minute. So they're short-term systems. Obviously some are positive, some are negative, but for the most part we went short here, obviously, with all of these systems today. On the exit side, this being today, at least as of about 5:30 or so in the afternoon, we had a number of longs that had liquidated themselves. We had 4 longs, 45, 60, 90, and another 60. So we had a hedge at one time between the longs and the shorts, and obviously with today's action having been sold off, that we were able to unwind the longs, and now primarily obviously we're short the market. Now, where's the market headed? And because of the surge and the strength that we've seen to the trend, I'll just simply show this to you. The depth gauge being one of our trend indicators. This actually, let me show this to you first. Here's crude oil. You can see that of the 40 markets, it's number 3 on this list as far as strength of trend. Now, the other thing I like to do is to take a look at the tendencies of the market and really get a feel for how often does this happen. So 42.9, we'll just call it 43% of the time. The fact that it's black means that it is trending. It's on the bull side. We got a bear trend and a non-trending phase as well that you can pull up. But 43% of the time over the last 3 years. So obviously it's not going back to eternity, but for the last 3 years that it has trended less than 50% of the time. In fact, majority of the markets have, just because of the tendencies of the market. But when you look at the listing of all the different markets, you can see the wheats, both Kansas City and normal wheat, that they don't trend. No surprise there. When anybody trades wheat, they know that it doesn't have a bullish trend to it over the last 3+ years or so. But crude oil is one that has a tendency to trend occasionally. It's in one of those bullish trends right now, but it's not like one that in the last 3 years has been, when we take snapshots of this, where it can be long, it can have a position where the trend is very, very strong, 60-odd% of the time. We're just not in one of those phases with any of the markets. So with that having been said, there is a trend that's underway, and our concern now is, if we take a look again here at the market, where could the market be headed? You can see that the support level that we have down here is pretty far away, and therein lies the situation with crude oil. This is taken a snapshot towards during the course of the day when the market was up into the high 64s level. So it's a little bit dated here. I'll have to update this again later this afternoon or early this evening. But when I did take the snapshot with this particular chart, you can see that there has been and is a major gap between support levels. And so that's why I want to actually show this. There's really nothing there to hold on to the market. If you look back a couple of days ago, I talked about support gaps and I was showing it in sugar. You might want to look at the deep dive from a couple of days ago specifically to sugar because I addressed the fact that there was a gap in that market. In fact, it did sell off. Well, and there was nothing to hold on to it. Well, the same condition. In fact, it's a little bit stronger here, that there's really nothing to support the market until we get down to 62.15. So we'll just call 62-ish. Even that, the strength and the amount of counts, only one, is not very strong. So there's really nothing really holding this market for right now. So our systems, actually, here's that sugar that I was talking about. It was done on the 13th, so if you wanted to take a look at it. So the bottom line is that if we take a look at where crude is at the present time, that there's a major point where the market could sell off here and there'd be nothing to support it until we get down to, and this is obviously rising, this being the 50-day moving average, just as a reference, that it could target it, and that would then correspond with the level that we have over here. So the specific resistance is at 59, and this solely on the daily bar basis. The other condition I was talking about, that other chart, this one right here, this takes into account the strength of dailies, the weeklies, and the 120-minute bars together. And so there are other time frames where there's some support to the market at 62. But when we look at the actual market and we look at it just on daily bar basis, we've got nothing holding on to this until we get down to this particular level right through here. Now, this is just over the last few months or so, going back to July of last year. I'm going to do this just to give you an idea that there's really nothing holding on to the market going back further and further. So there really is a nice gap here that if the market, despite this bearish trend and the fact that the volatility is high and likely to reverse and take advantage of our short positions, that if the market's able to head higher, hey, all the more power to it. There are people that are talking about 70 on crude oil. For right now, just from our perspective, we think it's gotten a little ahead of itself, and that we're looking at no support to the market until we get down to the 58, 59, call it 60-ish level. And from that standpoint, then there's a lot of money to be made on the short side, to which it's what the systems are essentially looking for. So with these systems, obviously they're short term. A bunch of them are 120 minutes, and then a couple of 45s and 60s. That there's really not any long term, no dailies, no weeklies, nothing that's going to really hold on positions. We've just gotten into positions. There's not a huge profit that's already been made, but there is a type of scenario that is setting up here that based upon what the systems are showing, the lack of support to the market where it's gotten ahead of itself, the fact that there are other conditions that are taking place that when we take a look at the deep dive and we look at some of the other conditions like the surge high that occurred 2 trading days ago, in that particular instance, there have been warning signs leading up to this, the hedging of our positions. Now we've unwound the longs and we're only looking exclusively at the shorts. We've got the bearish divergences that are showing up. We've got the energy level, which is quite high, which is sometimes like a crescendo effect. We got the support gap to the market where there's no support to the market in itself. Long story short, that's what we're looking for. That's what we're going to play this thing out. So if you do have questions on other markets, definitely just get in touch with me through email. And the only caveat being is that when I do talk about a market, I'm going to have some type of condition that has happened, or in this case with a deep dive, another condition that there are certain things are taking place. So with the pivot high, the rocket, these are just really strong indications that the market is, as a minimum, going to take a bit of a breather here and theoretically should sell off. We'll see what does take place. Crude oil has been, as I pointed out with the depth gauge, the trend has been very strong. Sometimes it's hard to fight that particular trend, but the systems are telling us one thing, and if ever it comes down to it, we always abide by the systems more so than we do with any of the other tools we actually have. So we'll see what happens with crude, and we'll see what happens with the systems. As I said, if you had questions about other markets, definitely want to hear from you, and I appreciate you watching. Bye-bye.